Hello. Thank you for joining us today on the Profit Scale Thrive podcast, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I am your host, Kelly Brubaker. We have a secret though. This is a special place because we don't work with every law firm owner. We support the solo attorneys who are also single parents because we know the special challenges you face, and we know the business advice out there is not always practical for you and your firm. Each week, we will talk about things that will give you the insight you need to stop feeling overwhelmed, to gain back your confidence, and to finally enjoy your law firm and your life again. Welcome back to episode number 24. So, the last few episodes, we've been talking about content creation and posting strategies to attract new clients. I want to know how that's going. Let me know. I really do want some feedback on those episodes. So today we're going to dive into a topic that's not just relevant, but transformative for every business owner out there. What am I talking about? Money mindset. If you've ever found yourself lying awake at night, stressing out over your rates, or if you've ever felt that pang of guilt when sending out a bill to a client, today's episode promises to be a game changer. Now, my main go-to people for money mindset are Denise Duffield Thomas and Mike Aguilera. I'd love to know who you follow for money mindset. Denise wrote the books Get Rich Lucky Bitch and Chill and Prosper, among some other books. And Mike is the founder of Food Dog Group, and he's a keynote speaker, which is how I discovered him. He was the keynote at a conference I attended last year. Now, I know when I opened my first business, I vowed to be different from my competitors because I was going to be affordable. If I wouldn't pay my rates, then they must have been too high. I knew I'd be on a shoestring budget, but I was used to being an underdog. I had left a big four CPA firm where I was being billed out at $500 to $600 an hour, which I thought was outrageous. And this was back in the early 2000s. So the first tax returns that I did for clients, simple 1040s, I charged 75 bucks. They were e-filed, but I also printed the returns and put them in a nice three-hole punched report folder. I included pre-addressed and stamped envelopes. Yes, I paid postage when clients owed money with those returns. And those costs plus my time to assemble and deliver a return was well above the 75 bucks that I was charging. And that didn't even include my time to prepare a return or my knowledge, all the years I spent learning how to do this work. So I quickly realized that at that rate, I couldn't even afford tax software to actually prepare the returns unless I was cranking out at least 1,000 returns per season. And I didn't realize it at the time, but I was setting myself up for failure. It created a situation where I was burned out, stressed out, and gaining weight. Life was no longer fun. And the sole reason for being self employed was to have freedom. But I just chained myself to my desk by requiring myself to be a high volume firm. And here's another thing, that low price, it attracted the people and business owners who were not my ideal client. While my intention was to work with people who were just shy of middle class because I felt that they were underserved in the market, my rates were attracting people who saw me as cheap. I felt that I was giving them the red carpet treatment, but they wanted more. They wanted their returns filed faster, they wanted higher refunds, and they complained that my fees were too high. It crushed me personally and it strained my business. And as I raised my rates over time, so many clients left. I was thankful that the pain in the ass ones left, but it was such a long road to cultivate clients I loved working with who would pay me what I'm worth. And while this is my story, I suspect that many of you have a similar story. And I know I've spoken to so many attorneys when they first start out. And actually, I know some who have been around for a really long time who are still charging rates that are not sustainable. It's a constant struggle because there's never enough money in the bank and there's always too much work to get done. So let's address money mindset today, shall we? But before we dive deep, let's set the stage. As we've discussed in previous episodes, our mission is unwavering, guiding attorneys like you towards a future that's not just about profits, but about purpose, passion, and a sense of fulfillment. And believe me, understanding your worth and charging accordingly is a pivotal step in that enriching journey. So let's start with the reasons to charge what you are worth. First up, value perception. Let's start with a simple analogy. Imagine walking into a store and seeing two similar products. One is priced significantly lower than the other. Your immediate thought? Be truthful. There must be something wrong with the cheaper one, right? The same psychology applies to your services. When you charge below market rates, potential clients might question your capabilities. Price, more often than not, is a direct reflection of perceived value. Number two, sustainability. Let's talk numbers for a moment. Every business, including your firm, has overhead expenses. There's insurance, utilities, software subscriptions, and so much more. Charging a fair rate ensures you cover these costs comfortably, leaving room for profit, growth, and a cushion for those rainy days. Number three, attracting ideal clients. So, setting your rates at market value isn't just about money, it's about the message you're sending out. It tells potential clients that you're confident, experienced, and worth every penny. This in turn attracts clients who are serious, committed, and value quality over bargains. Number four, professional growth. So think about the bigger picture. With a healthy income, you can invest in yourself. And I'm talking about the courses and programs beyond your required CLE that you've been eyeing. Or perhaps it's attending an international conference where you can network with the best in the business. Charging appropriately gives you the resources to continuously elevate your practice. And my fifth reason, respect and recognition. So, in the legal world, reputation is everything. And when you charge what you're worth, you stand firm on your rates. You're not just setting a price, you're making a statement. You're telling your peers, competitors, and clients that you're a force to be reckoned with. Okay, so let's talk about the benefits of billing sustainable, at sustainable rates. Number one, financial security. So let's face it, financial stability isn't just about luxury, it's about peace of mind. When you charge market rates, you're ensuring a steady cash flow, allowing you to plan for the future, be it expanding your firm, investing in assets, or even planning that dream vacation to the Maldives. Number two, work life balance. Money is just not currency, it's time. When you're compensated fairly, you don't have to overwork. And this means more time for family dinners, weekend getaways, or simply curling up with a good book. Number three, higher quality clients. There's a certain satisfaction in working with clients who respect your expertise. Charging market rates often means you're dealing with clients who understand the intricacies of the legal world, ensuring smoother interactions and more fulfilling case resolutions. Number four, reinvestment opportunities. So think of your firm as a plant, and with proper nourishment, it will grow. With a healthy profit margin, you can think of hiring more staff, investing in cutting edge technology, or even expanding to a new location. The fifth benefit, personal growth. Beyond the four walls of your office, there's a world waiting to be explored. Financial stability means you can indulge in personal growth, be it a pottery class, a wine tasting course, or even a month-long sabbatical to explore Europe. So I think it's important that while I just mentioned some advantages of adequate rates, some detriments were implied in what I just talked about. So to be clear, let's flip the script a little bit and specifically state the detriments of charging low rates. Number one, financial strain. Constantly being in the red isn't just stressful, it's demoralizing. Charging too low means you're always playing catch up, leaving little room for innovation or growth. Number two, overwork and burnout. There's a physical cost to undercharging. To make ends meet, you find yourself buried under a mountain of cases, leading to long hours, stress, and eventual burnout. Number three, lower quality clients. Ironically, a lower rate might attract more problematic clients. Those who don't value your services might be more demanding, leading to a strained client relationship and potential conflicts. Number four, stunted growth. Every business needs to evolve, adapt, and grow. With limited earnings, there's a cap on how much you can reinvest, leading to stagnation. And fifth, diminished self worth. So, this is perhaps the most significant cost. Continuously undervaluing your services can erode your self confidence, leading to self doubt, anxiety, and a feeling of being stuck in a rut. So, as Denise Duffield Thomas wisely puts it, your money mindset determines your earnings ceiling. Ask yourself, where have you set your ceiling? Remember, every time you undervalue yourself, you're not just affecting your bank balance, you're shaping your future, your dreams, and your legacy. Now it's time for our listener's question of the week. And this week's question is from Ricky. Help. I'm looking at my QuickBooks reports that my bookkeeper just sent me, and my P&L says that I have a net profit this year of over 200,000, but my bank account is in an overdraft position right now. How is this possible to be profitable without money in the bank? Oh my, Ricky. So let's see if I can offer some help. And not that it helps, but sadly, I have seen this situation so many times. First, I would ask your bookkeeper if they have reconciled all of your asset and liability accounts through the most recent month end. Review all unreconciled transactions to determine if those are valid transactions, meaning they are not duplicates, and then confirm that they are still outstanding per your bank's records. My suspicion is that there's at least one extra account somewhere in your books that's holding some transactions that are being posted to your books in error. This will happen often when you connect other apps and programs to your QBO file. For example, if you use Clio or MyCase, and I am not singling these out, but just throwing out possible programs you may be using, are they syncing correctly to QuickBooks? It's possible that they were set up incorrectly, or they were set up correctly initially, but since then you've changed your chart of accounts in QuickBooks, but didn't get the sync updated correctly. So, what can happen is your billing program creates a bill, it posts it to QBO correctly with the new bill posting into your AR and your revenue. And I don't want to get off track here with whether you pay taxes on a cash basis or an accrual basis. So please just stick with me here. So we have a new invoice that went to AR, it increased AR, increased revenue. Okay. But when the payment comes in and it gets posted into your billing program, the payment may not sync correctly to QBO. So what if it posts the increase to your bank account because that's where money got deposited, and then it also increases your revenue a second time? Now your AR is too high, and so is your revenue, because what should have happened is your AR should have decreased by the amount of the payment that you just received, and the correct part was your bank account should have increased. But the whole thing is it results in a net profit number that's overstated. And then if you're using your P&L to make decisions, you're using false numbers. So making sure that every asset and liability account on your books is reconciled every month end, and confirming that the unreconciled transactions are correct in your books. This will lead to quickly identifying when there is an issue that needs to be fixed. I hope this helps, but if there are more questions or follow-ups, please don't hesitate to reach out. And also, if you have a question that you would like me to answer for you, you can email them to me at podcast@profitscalethrive.com. Thanks. This week's inspirational quote is from Anonymous. You will realize you are enough when you recognize there is no measuring stick. It's all made up. The ruler itself doesn't even know the rules. Mindset is a very powerful tool. It's great for creating good in your life, but it can hold you back. And I'm not even talking crazy things like voodoo or magic, but just simply believing in yourself can take you a long way. I've had too many conversations with business owners afraid to raise their rates for fear of losing clients. But the hard truth is that if you are not profitable, your business is eventually going to close. The hardest thing that many professional service providers I've spoken with complain about is the fear of being judged as too expensive. I'm telling you that it's not okay for you to believe that. It's not okay. Don't believe it. Those who say that are most likely not business owners, and they don't understand what costs are involved in running a business. That is one of the most powerful reasons I love the cash management system Profit First. It forces a business to raise rates to a level that creates profit for the owner and a reasonable salary too. So if you're feeling like your billable rate is too low, I have a spreadsheet, but don't be intimidated by a spreadsheet. Its purpose is to do the math for you. There's an input area for your budget, and then you can input how many hours a week, or I'm sorry, yeah, how many hours a week and how many weeks a year. So how many hours you want to work a year. And then it spits out your minimum hourly rate needed to break even. So if you want to grab a copy of it, I'll leave a link in the notes below. And before I sign off for today, for listeners of my podcast, you have an opportunity to get a copy of my newly published book for free. Oh, and for those who are watching on video, you can see it. I just got my order in. I got a whole bunch of them. So it's called Stop Struggling and Start Thriving, a guide to transform your law firm. But you can get it for free, although I have a copy in my hand, the printed actual paper book. You can download a PDF copy of it for free. I'll leave the link in the show notes. But if you want the paperback or if you want to read it on Kindle, there's a link also in the notes. It's available on Amazon. If you have any questions about today's episode, feel free to comment if you're watching on YouTube or send me an email to podcast@profitscalethrive.com. And if you know someone who might need to hear this information, please share this episode with them. Or if you're on YouTube, tag them below. Be sure to follow and subscribe to get notifications for future episodes. Did you enjoy this episode? Please consider leaving a review. And before I go, remember, profit is something you intentionally plan for in the beginning. It is not a potential bonus at the end of the year. Thanks and have an amazing day.